Okay, perfect. So welcome to our second panel of today's track on global co-opetition and globalization. And the focus of our panel now is about bank and fintech cooperation. And really followed up with they did it and what is their feedback. So I'm surrounded with entrepreneurs, successful entrepreneurs who have done it before, who have managed to work and grow their businesses very well. And we want to learn from them today how they've done it, the lessons they can share with us, and highlight, the key insights, and the best practices, from your own expertise. So I would like, first of all, just to let yourself introduce yourself. So maybe Ed, if we start with you, please.
Yeah, hi, I'm Ed. I'm co-founder of Bud. We're basically a platform that brings third-party services into bank experiences. So we're really focused on kind of the marketplace. How do we bring things that are beyond banking into the bank experience with intelligence and leveraging data? We just signed a global MSA to do that aggregation and data enrichment for Hsbc, working with a handful of startups, banks, and SMEs.
Perfect, that's great, Ed. And for you?
Hello, I'm Adina, co-founder of Active Asset Allocation. So we have two expertise. The first one is the making of investment algorithms for institutional investors, asset managers, banks, etc. And the other expertise is around the digital tools that will help them digitalize. I know I've heard that so much, but it's basically a B2B2C solution where the investment algorithms that we make can be individualized down to the final investor, and all this surrounded by all the digital tools necessary, KYCs, profiling, reporting, all these fancy things.
Very exciting. It's a very exciting area. Loubna, if we come to you from Loubna from FriendlyScore.
Hi everyone, so my name is Loubna Bazine and I am the CEO of FriendlyScore. We are a data analytics software company based in London, and we are running analytics on the top of open banking PSD2 data. So we are also acting as a bank transaction aggregator or bank aggregator. We are, mainly like now, we are active in UK and also in Ireland, and we have expansion plan for Europe. And yes, we have been working with banks. There are few banks with whom we are active right now, and happy to share with you the experience. Yes.
Fantastic. And Olivier?
Hello, my name is Olivier. I'm a co-founder of Moneythor. At Moneythor, we help banks make their digital banking better. We do that with an analytics engine and a personalization engine, which they use to create personalized nudges, actionable insights, recommendations for their customers, and make it easy to deploy it through their digital channels. We're headquartered in Singapore, which is where I'm based, even if I sound French a little bit. But we also have presence here in the region. Customers from Canada, Australia, New Zealand, Hong Kong, Singapore, Middle East, France, all of them banks of all sizes.
Yes, that's great. So I think we've got also a global perspective. We've got Singapore, UK, we've got French perspective, we've got a really global outlook here as well. And maybe Loubna, if I can start with you and FriendlyScore. I mean, Loubna uses PSD2 open banking data to help you credit score.
Yes.
The data of customers, yes. And also you work very closely with banks. Can you tell us more how you do that, please?
So just a bit of a background of the company. So yes, right now we are using open banking data for credit analytics and mainly to service the lenders for credit scoring and credit decisioning, affordability and so on. So that's what we are doing right now. Originally, the company actually been created to do what we call social credit scoring, meaning that we have been using social media and other open APIs to calculate the credit score. And in our old products, actually, we have been working with banks. So one of the banks we've been working with is like a major French bank, and also we are with banks in the Middle East and banks in Latin America. So the overall experience and what we have learned from these experiences is the fact that working in a bank with a bank as a startup could be very challenging, and one of the biggest things as you work with a bank is the time that is needed for a startup to onboard big institutions, and especially because of regulations. And mainly, but the most and the biggest positive thing actually that you get as a startup, as you work with big institutions at like big global banks, is the fact if you are ready and you get actually onboarded by a bank, you are ready for everything else, because really they make you kind of, you know, like mainly like all the procedures, like everything. So if you manage actually to onboard them is a good thing and a good exercise for fintech. Then actually after that, it's like it's easy for other businesses. So that's mainly like overall of our experience. Yes.
I mean, I've heard a few days ago a case study by one entrepreneur, you know, who said he had a meeting with a large bank and they had 10 lawyers in the room, and the startup had like not even one lawyer, you know, they had one lawyer hired basically to support them. And did you have those experiences where you had this almost overkill, you know, overload of
It's mainly like working with lawyers is something that you have to do like all the time when you are working with a bank, like and also compliance experts and so on, because it's mainly you are selling to a bank and you are selling to regulations that are coming from a country regulation and also from their internal regulations. So it's a lot of legal work that has to be done, and that's very challenging when you are like a small startup. In our early days, that was something that is like a big thing for us. But obviously, as I said, when you work with them, you learn all of these things and you get ready, and mainly like you have to have this in place. But when you have it ready with one bank, it's mainly it repeated itself with other banks. So yes, on the legal side is something that a startup need to be like very ready on that side. Yes,
to get enterprise ready.
Yeah, for sure. Yeah.
Yes, excellent, Loubna. Thank you. Maybe Ed, if I can come to you. You know, again, you use open banking data. You're a platform, you know, using and leveraging PSD2 as well. And as you mentioned in your introduction, you have signed this partnership with HSBC, which must be an enormously important strategic deal and partnership with them.
Sure.
And can you tell us more about how it came about, the benefits for you, the benefits for HSBC, you know, how it is being structured?
Sure. I mean, I'd love to be able to kind of like write a really kind of clickbaity article that's like the 10 things you do to sign a global bank. But unfortunately, there's not really any silver bullet. I think the thing that's kind of amongst all the different things we did, the pitching, the standing on stages, telling them the world was going to fall down and kind of going through compliance regulation, all those things. I mean, those are obviously all the things you have to do. And so there's no kind of secret answer on that. It's just a lot of hard work. But the kind of number one thing that's has always made it work for us is being the sort of sponsor in the bank. So that one person typically who actually really wants to get this thing done, who doesn't operate typically the way the bank does, is kind of saying, do you know what? Don't worry. I'll help this. I'll make this happen. I'll figure it out. And sort of, I sort of naively once said to the press, it's about making someone look good to their boss, which obviously got picked up by the banks and they weren't happy about. But and actually, I've learned that's not really true. Not because I got in trouble for saying it, but because actually it's about someone that genuinely wants to do something, and if they're senior enough to make it happen, and sort of actually creating a relationship with that person, being on WhatsApp with them, you know, taking an interest in their life, you know, those are actually the things that make it happen. Unfortunately, or fortunately, if they're interesting. So yeah, I mean, I think that really is the one thing. Despite, you know, obviously you got to get your ducks in a row. You have to be able to sell your product. There has to be value there for the bank and or the customer. You have to be really tight on your data security, but other than that, I think just relationships.
Yes. And what exactly will you do for HSBC?
So yeah, we are supplying aggregation to them in the UK and hopefully kind of further afield. But really where we're focused and they're focused and where we're really aligned with them and a couple of other institutions is that ultimately it's not really about kind of the end game, and I'm thinking everyone here will agree it's about the end game is not really about just getting the data, right? So the bank existed in a world where they had their own data and they weren't doing too much with it because they didn't really have to. There wasn't really competition around it, but actually now everyone can get access to data. I mean, I'm sure everyone's seen all the different aggregators selling their services here. The price is coming down, the access is getting better, but what the hell are you going to do with the data once you have it? You didn't really do anything with the data in the first place. and it's a different market dynamic. So what we're focused on is really, okay, let's actually use this data to figure out who the customer is, what do they like, what do they don't like, how can we help them, and then go out to market and find services like helping customers, something we've built, helping customers to build their credit score when they pay rent, or detecting when people are overpaying for certain bills and utilities, and going out and partnering with third parties to make that happen in the bank. That's kind of a very early stage of what we're doing, and obviously, there's a hell of a lot of things outside the bank that should exist in the bank because it makes sense in the banking experience, and that's where we're focused. So it's really just enabling us to sort of identify something in the data, who this customer is, what do they need, and then going out and getting a product to change their life, essentially. So yeah, that's kind of the main focus where we are.
That's great, Ed. And just final question, how long did it take to sign up HSBC as a partner?
Who's asking? Yeah, if the investor's asking, it took us a year. No, I mean, the relationship was, best part of 3 years. We, and obviously it's still ongoing, we set up an app with them into market called Arthur. We had about 5,000 customers using it, testing various different things, testing aggregation, testing marketplace. They were also doing some of their own tests, and we kind of came together and figured out the best way was to do it through this partnership. And yeah, the procurement cycle probably took about best part of a year. Banks are getting better, but they're not really set up to work with startups, and startups need to be set up to work with enterprises. So it's a bit of both ways. Yes. But again, on that, there's no silver bullet.
Great, Ed. Thank you. Coming to you, Adina. You launched and you're the CEO of Active Asset Allocation, and you work with banks, you work with corporates, and when you do those partnerships, when you grew up the company, do you find there's a different approach of how you engage with regulated entities such as banks versus non-regulated corporate customers, or is it similar? What approach worked best in terms of partnership strategies for you?
Yeah, I think the fact that they are regulated or not doesn't really matter. Maybe there's a bit more due diligence, but it's not significantly different. What we should keep in mind is the different point of view when you're a startup, when you're a corporate or institution, whatever, is that you're basically fighting for survival every day, and they are basically at the best fighting for keeping a sweet spot they're in. But then we get into something, maybe I shouldn't say that, right? But if I want to be honest, sometimes people that work for those institutions, their personal interests are not aligned with those of the institution. So sometimes you have something to bring to them which will really bring value, but if it's not in line with what someone has decided is best for himself, you'll never get it. So that's where the sponsor is very important, because that inside sponsor will be there and fight for you and give you feedback, because you get the feedback from the institution, official feedback. We are thinking about it, we don't have the budget, it's this and that. And then your sponsor tells you, oh no, they started working with someone else. They didn't even tell you, right? And so that's something really, really difficult. And I'm not complaining or anything, because we've been doing that for 10 years, and we did manage to get very good partnerships with very great people. It's just, it's very, very long. One of our biggest customers, which is the pension fund for doctors in France, it took us 4 years to get that customer. 4 years when you speak to the customer like every month, or every 2 months, and you go back. And at some point I was thinking, maybe I should just drop it. Because they wouldn't say no, but they wouldn't say yes either. So that's something you have to be aware of. I think if I can maybe give a piece of advice, make sure you make them tell you no as soon as possible. So you don't waste your time. That's one of our biggest, it happened to us twice. We signed a contract. We hired someone to work on that. And then it never started, And there's nothing you can do about it. You can say, hey, I have a contract. And they say, yeah, sorry, but I don't need your service anymore. So it's
Frustrating, huh? Frustrating. I think it shows kind of all entrepreneurs in the room to have the resilience to keep on going, but not to give up when those things happen. Yeah.
I think it's one of the biggest qualities you have to look for, resilience. And also, sorry to say that, you need luck. Hard work, but luck. That's going to make the whole difference.
Yes, it's good advice, and I think definitely experience I've seen again and again. When you hear from fintech companies, it's the difference in terms of time pressure. The fintech company is really trying to survive every day, trying to keep revenues coming in, and then the corporate having the luxury of time, having no time pressure and different alignment of interests as well. Where often, the alignment is very short term maybe, or maybe some people are close to retirement, they don't want to change, and then you've got the organization would like to change, but it just doesn't happen. Yes, I totally see that.
Exactly
yes, it happens, unfortunately, and that's a reality.
And when you're lucky, they tell you, oh, we are very interested by your product, so they will give you an appointment in 3 months from now.
Yes.
Because they are very interested,
Yes, good point. And coming to you, Olivier, to Singapore and coming to Moneythor. So for you work with normal banks, quote unquote, so traditional banks, but you also work with challenger banks. And you have signed, successful partnerships with both. How do you see them differently? Is it much easier to work with the challenger banks because they're more techy as well than the traditional banks? So what has been your experience?
Yeah. So we work with the two types. Actually, I would even break down the incumbents into two categories. There's the incumbent looking to enhance its existing digital channels, and the incumbents trying to launch a new digital bank in a new market or in its own market, which is in itself two different ones. Well, the difference is there are some obvious ones. We've talked about time. The whole concept of time is very different. Another obvious one is the technology. You tend to have much cleaner, simpler tech stack with challengers because they've just started. So it tends to be a lot easier to integrate, a lot easier. The ability to do things and get data in and out and transform things, it's a lot easier. There's another one we should not underestimate as well, is that incumbents have a lot more money to spend than challengers. That's a plus to work with the incumbents. But there are others that are slightly more subtle, which is to do with the people. And the level of engagement of the people we're interacting with in the organization can be very, very different. Now even incumbents have done most of them, their agile transformation. So they are product owners everywhere. But actually the product owner has very often forgotten that there's the word ownership in product owner. And most of the time it's just, with a lot of incumbents, a glorified product manager. So this accountability and ownership on the project you're involved in is something that we tend to experience a lot more. It's that skin in the game with the smaller entity than the big one. Now, at one point, though, there is a stage we've noticed when the challenger bank is starting to look like the incumbent. And I can't really put my hand around, is it when they reach a number of people in the staff and they start to create similar silos and people lose accountability or ownership, or is it based on the amount of funding that they've raised? It's probably a bit of both, actually. But for some of the larger challengers or large fintech firms that we've worked with, we can at some point start to notice the same people issues as with the incumbents.
And listening to all of you, and how long it takes to sign up a corporate customer and how long it takes to develop and nurture those partnerships, it of course means that the client acquisition costs are very high when you think about it, because how long does it take you to acquire such a corporate client? And as an investor, one of the key things is, and to talk about unit economics, that your client acquisition costs have been less than the lifetime revenue of a customer. Because the lifetime revenue of a customer basically means how much revenue do you earn from this relationship. And when we think about B2C models, and you're not B2C business models, the issue often B2C models have got that the client acquisition cost is higher than the lifetime revenue of the customer because the customers are moving, they're not loyal to the product. But in your case, where it takes a few years sometimes to acquire a corporate customer, your lifetime revenue or your revenue you expect must be high. So just a proof of concept for £10,000 doesn't cut it. So is your goal, I mean, to really sign up multi-year contracts then as a result, I would assume? I don't know who wants to take this question.
I can say a few words on that because yes, so it's long to get a customer on board, but then once you have them, if you are doing your job, they stick with you. So our retention rate over the years has been 100%. So yes, it took time. Yes, it was expensive, but not nearly as expensive as going to the B2C market.
Yes.
I mean, when you see all those fintechs that have started B2C and are either dying or switching markets to go to the B2B, it's clearly a better deal from a financial standpoint.
Makes sense, yes. Any other comments?
No, yeah, I mean, when you're in, you're in.
Yeah.
Yes.
So yes, arguably it takes a long time, it's painful, it's a lot of work, but also, I mean, on their side as well, right? So when you're in, you tend to be around for a long time. So if you manage to structure your commercials in a way that you got that nice, you know, recurring type relationship, that's usually in the long run a profitable relationship. And the fact that it takes a lot of time does not necessarily mean that you need to have your business development folks calling them every single day. So it's not necessarily, you have to be patient, but it's not necessarily super costly to actually follow up with those leads.
Yeah. Yes. I would say the same. It's very challenging to actually like take them over and onboard them, but it's worth it. Because it's an investment when it comes to time. Yes, sometimes it takes 3. We saw even in our case like 4 years with a major bank, but it did worth it. Because once you onboard them, they are there to stay, and also you get market recognition. You learn a lot from the experience, and you are with them. And if you are talking about like a big organization, we are with few of them like that are global banks. It's also the opportunity to go with them to other regions, to other countries. So the potential of the business is really huge. It's true that it can kill a startup because for a few years you are not getting any revenue, and maybe one of the things that a startup should do is maybe to diversify the portfolio and get also some small companies to get some revenue stream from them, or like challenger banks or some institutions that are easier to take on board. But big institutions or big banks, the potential of business with them is great because, as I said, you know, from like when they onboard you, like usually it's for good, and then the potential of going to other places and so on. In our case, for example, we started with a major French bank with our alternative credit scoring solution in Brazil, and we had done like a good POC with good results, and then we launched our open banking credit scoring and open banking connectivity and so on. And mainly now we are about to start with them in UK and to start with them in Poland and other regions. So see, it's worth it actually to wait for them for like 3 years and being mainly not paid on the POC for 1.5 years. So yeah, so it's a good investment, yeah.
Yes, that's great. And I think coming to your opportunity cost, almost, you know, to the choice you have to make, because as a small startup, you can't work with all companies and all partnerships which are out there because of time constraints, because of people constraints. So you have to prioritize and you have to choose your partners wisely. And how do you do that? And I know we don't have so much time left, so I just want to ask you for your top tip. You know, what is your top tip? How you choose the right partners you want to focus your team on, because you think that's the most fruitful partnership. Maybe Ed, if I start with you.
Yeah, I mean, it's from my side, it's kind of simple sales message that you need to fill your funnel to the extent that you can actually drop stuff. Because if you've got like 3 things in your funnel and they're not that great, and you've got to work on them really hard, you know, you really, well, let's say it's 20 deals that are all crap. You want like 50, 60, 80 deals in that pipeline. And, you know, you can pick the winners. You'll know. I mean, it's not massively challenging. Obviously, the never say no thing comes into place, and obviously that's a lesson you learn from investors as well, and they'll never say no. But yeah, I think that's it. I think we've always been best off and been able to pick the winners when we've had a bigger pipeline to work from.
Makes sense. Good tip. Yes, large pipeline to choose from. Yes, Adina, for you.
I think it's easier if you know somebody in the company. So if there's a company where you can get to the top, start there. Always easier to go from the top down than the other way around. Yeah, and look for a sponsor who will stick with you. The only thing is timing, because sometimes it happened to us that the sponsor goes away before you get to close the deal. So that's a shame, but...
It's annoying, but happens. Oh, yes, exactly. And Loubna, for you, what's your top tip?
So to have really a very long breath and be very persistent and be very smart also on who you are targeting, and but mainly really to be very persistent and yeah.
Okay.
So, and do not think that it's something that happens overnight. As we are speaking about big banks and big organizations, they tend to be very slow, and it's mainly you have to be ready for the challenge mainly. Yeah.
Great, yes. And Olivier, what's your top tip?
Okay, I'll use two. One, no free POC.
No free,
Right?
okay.
If you want me to do something for free, how can you expect that I'm going to believe you will pay for the recurring license subsequently that will last forever?
Yes.
So no free POC question for us has been a pretty good filter to understand if people are serious or not serious. And the second one is not to be afraid of RFPs. I mean, it sounds a bit old-fashioned and everything, but at least you got a level playing field. It means that they have budget, usually when they've reached a point where there is an RFP out there, and you will be able to compete. I mean, I think entrepreneurs in general will love competition. So this opportunity of an RFP, I hear quite a few of our peers say, yeah, an RFP, we would have liked to go beyond backdoor and everything. It's not necessarily a good thing. So no free POC and don't be afraid of RFP.
Great tips, Olivier. And I know we've got lots of banks, heads of innovation in the room as well, looking to partner with all of you here on stage and looking for the best fintech companies to work with. If you would have a wish to them, how they should approach you as fintech founders, what would it be? How could banks, corporates approach you as fintech founders better to make it more attractive, more fun, more easy to do business with them? Olivier, we'll start with you, please.
Okay, so respond to your damn email. I mean, we are all very, very busy, but seriously, it doesn't take a long time to respond to an email. And I think it's back to the point what was made earlier is quick death.
Yes.
Right. Especially
Yes
to say
and
no.
no.
Say no, yeah.
Right? Don't think dragging forever. Just respond to your damn email and quick death. It's fine. We're used to have those bad news all the time anyway.
Yes, true, perfect. Loubna?
I think for myself, I would say the same thing as you for sure. I don't want to repeat myself, but mainly the other thing is to coordinate, because sometimes I see that some banks, they don't really speak, departments, they don't speak with each other, and then you tend actually speaking very advanced talks with one department, and then you are approached by another department, and they've never heard about you, even if actually you are in an active project in the bank. So I think also because that's one of the problems of big organizations, is to mainly coordinate about their innovation projects. I see that sometimes, as I said, they don't really the info is not out there. Yeah.
Great tip as well, yes.
I would say, please keep in mind the fact that a startup is a company like all others, meaning that we have salaries to pay. So please don't use us for brain picking. Don't use us for getting the best ideas and then do them yourselves. It's just not fair.
Great advice and great request. Perfect. Adina, yes, Ed?
Yeah, so
Final words.
I have two things. I think if you ever hear anyone in your organization, when something's taking a long time, say, that's just big banks. Stamp that out, because it's quite embarrassing. Only because usually it's the person saying it whose job it is to get the job done. And so you're sort of saying, well, or you could just work a little bit faster, right? And I do understand large organizations, how they work. I mean, that's part of how we've done what we do. It's just that excuse, person by person, just doesn't really fly with me. The second one is with startups, and some people might disagree and might hate this, but what I've always really enjoyed when I working with big institutions is when they start coming to you with their problems. And they say, actually, we're building this thing, but actually there was a team over here thinking about this thing. Is that of interest to you? Could you build that? Because we've got 8 different product teams building new things, trying new things out. We test stuff on our app, we try stuff out. So we may have already built it, we may have tested it, and actually we can be a much better partner there. So I think it's going beyond that kind of vendor relationship. That's certainly something that we really enjoy doing.
Great, yes, to become a real strategic partner and challenge the fintech, if the fintech can come up with solutions. Perfect, wonderful. So thank you all very much. Excellent panel, a great insights to all of you. Thanks for sharing them with our audience.
Thank you. Thank you.